GIG Capital biến điều kỳ diệu thành sự thật.
Dot-com bubble is the 1995 to 2001 years. Stock market downturn. Stock market downturn is 2002 years. United housing bubble, financial crisis is 2007 years to 2008 years, followed by the Great Recession. Subprime mortgage. Everybody know very well, like this one. The financial term by the field, this financial term by the field, you need to understand a little, okay? Is auditing, account software, bookkeeping, is bookkeeping, double bookkeeping, is the maybe company double bookkeeping. And the United of CPA system of test system, FASB, financial accountancy, financial statement. Financial statement, you know, the five kind of financial statement, balance sheet, and profit and loss statement, income statement, and the cash flow statement, etc. And also management accounting, philosophy of accounting, working capital. The working capital, everybody know very well, is the hedge accounting, IFRS 9, fair value accounting, banking, how to do banking, Banking is the corporate financing, maybe corporate financing theory and the financial management, how to do. Banking is the, normal speaking, saving and loan market. This is banking. Saving and loan is banking. Balance sheet analysis, financial ratio. Here, balance sheet is normally government, central bank analysis, balance sheet. Government, treasury, department balance sheet. And this is the maybe economic unit of the government. Central bank balance sheet, commercial balance sheet. And also maybe company balance sheet. And the security company balance sheet. And maybe manufacturing balance sheet, and the personal balance sheet, a little different one. Maybe some is the other bookkeeping, normal single bookkeeping, but the big manufacturing is the banking, and also like this is double booking. And the financial ratio, business plan, capital budgeting, investment policy, and business valuation. Valuation, how to do valuation? Evaluation. Valuation is different one, and the stock valuation, fundamental analysis. Everything is needed to the before investor is a fundamental analysis you need. The real option valuation topics, and the Fisher separation theorem, Fisher separation theorem, and the source of financing. Understand? Maybe Dr. Kim is your financing source from where? There is too much. Financing source where? You know, the bank and saving and loan, banking financing. You understand? Second is the fund. Fund is too much kind of fund. Big fund, you understand? Especially, and also fund is too much kind of fund. Maybe is the next time I can lecturing course where fund. Fund is the from the which fund, how to do is the setup fund and also the raising of a fund. This is needed to the long lecturing course on behalf of you and your client, no problem. Valuation topics, Fisher separation theorem, source of financing, security, debt, initial public offer. Yes, public offer is the initial public offer. Private placement and public offer. Public offer is the open, you understand? Is the gathering offer from the many people. But the USA and maybe European Union and the Asian financial market is the public offer is the similar one, but the private placement different one. You understand? Private placement is different one. Because you know, maybe if you issue up the standby LC to me 500 million, and also we can maybe through the private placement gathering of 600% of the money and the investor to your project. You understand? This is a different one. Capital structure. You know, capital structure is the complicated through the maybe balance sheet. You understand? Cost of capital. Capital raising. How to do capital raising of the capital cost. the weighted average cost of capital. Modigliani-Miller theorem and Hamada's equation. Hamada's equation and Modigliani-Miller theorem is different one. And the dividend policy, dividend tax, dividend yield, Modigliani-Miller theorem, the corporate action, strategic financial management, managerial financing, management accounting, merger and acquisition, leverage buyout, cash buyout, takeover, corporate radar, and also contingent value writer, real option. Inside of the cash buyout, and also in too much kind of how to do, the company is the separate, how to do separate, and the real option. Option is the like this, working capital management, working capital, current asset, current liability, reliability. Reliability is meaning that, but the accounting terminology of the liabilities, current asset and abilities, and capital. You understand? It's a very simple one, and the return on investor, return on capital, return on asset, return on equity. In here, total asset, equity asset, capital asset, maybe capital inside of the equity and liability. This is the capital. Asset is a liability, and the capital is equal to the capital is the liability and the equity equal to the asset. The loan covenant. Loan covenant is like this one. There is many kind of loan. Maybe some is the syndicate loan, maybe loan consortium. Syndicate loan and the consortium is the same, but the UK financial market over there is over there talking about the consortium loan. But if USA, New York over there come there is this is a syndicate loan. But Asian is normally speaking, they say syndicate loan for the project financing program. But the other corporate financing program and the structured financing program can provide of the syndicate loan, not any problem. You understand? But normally speaking, in this case, the corporate financing program and the structured financing program inside, they don't want to do the syndicate loan. They can directly in their cost, and also they can do it. This is a different one. Cash conversion cycle. Cash management, strategic financial management and cash management. The financial management and the cash management is quite different one. Inventory optimization. This is manufacturing side. And also supply chain management. Just in time, economic order quantity, economic production quantity. This is economic order quantity is EOQ. Economic production quantity is EPQ. And the economic batch quantity, credit, creditor, debtor, and creditor, different one. Credit scoring, maybe if you are credit scoring, is how much the scoring point, okay, you can get over the how much like this. Default risk, insolvency, and also maybe bankrupt risk. Bankrupt risk. In here, first of all, default risk and bankrupt, and maybe workout and insolvency, declaration of insolvency. The discount and allowance. Discount and allowance is different. Discount allowance is give you the scope of the percentage, how much percent allowance give you, and maybe if you I give you the maybe 80%. Okay, you can only 10% discount and also another 10% allowance is returned to your profit. This is allowance. So factoring rate and supply chain financing. And management investment. This is a portfolio theory. Active management. The efficiency market hypothesis portfolio. Modern portfolio theory, capital asset pricing model, arbitrage pricing theory, passive management. Index fund. Fund is this index fund is belong to the derivative index fund. And activist shareholder mutual fund. The open-end fund, closed-end fund, maybe this is a European fund. European fund is a closed-end fund almost, but open-end fund in the USA market. But this open-end fund is the low problem. Now is the closed-end fund and open-end fund. Closed-end fund is very conservative way. You understand? Maybe if you invest over the 10 years project, you cannot call off of this fund and cannot return whenever you demand for the big amount of money. This is very big problem. In this case, is the closed-end fund and open-end fund. Open-end fund every time you want to return the money, but closed-end fund is like this. This is the closed fund. Is this fund you invest the money? This is the closed, cannot return out. It cannot cancel. But this fund program, commodity is within 3 months register of the market, fund market over there, is open market over there, sell and buying, no problem. You understand? Maybe you can put into the 500 million, this fund, you buy up the fund product, and then is after 6 months, you really demand for the 500 million. In this case, you can sell out. You understand? Sell out. But the other some negotiating of the market interest rate is the market interest rate. In terms of market interest rate, they can discounting how much of this fund, like this one. The term and the condition. Sometimes is this fund is the coupon fund. The otherwise is a discount fund. The different one. You understand? Different one, different sale. And the risk of a mutual fund family. Mutual fund is, you need to understand what is the meaning that the mutual fund and the financial engineering, long-term capital management, short-term, mid-term capital management, short-term financial, maybe the hedge fund is the short-term financial management, capital management, and the hedge, quantitative investing, the personal financing. Now, able account and asset allocation, budget, Codwell education saving account, credit and debt, education IRAS, and credit card, very well credit card, and the debt consolidation, mortgage loan, the pledge loan, mortgage loan, maybe real estate like this, the fixed asset, and the current asset, current asset and fixed asset different. But here, maybe the mortgage loan, the continuous repayment mortgage. You understand? Payback mortgage. You maybe buy up in New York City inside of Manhattan over there is the 500 million of apartment you buy. But the other, maybe leverage the LTV, loan to value 70%. Okay, in this case, the government bank is give you the several formula. Is the fixed rate, floating rate, and also the how to do continue to repayment is a principal at the interest how much. Maybe there's a 3 or 5 more formula give you, and also you can option, and then is you can option this one is in terms of this one you can continuous payment of the mortgage, your mortgage. Maybe 30 years. Maybe now is you are working very good area is the other you can give me the prime. The prime, and maybe prime, and there is this 3 kind of the credit give you, and also another they have the point of the too much complicated. This next time is the subprime mortgage. The lecturing course I can continue to the lecturing to you. Debt card, the credit card and debt card is different one, and the direct deposit, employment contract, and the commission. Employee stock option, stock option is a company stock option. Employee of the fringe and benefit. The stock option is the you are a very high good. You have a very good management, and you are a very strong of the sales network as the sales manager, sales director. In this case, is the government. Government is the company give you the stock option. Maybe you are working here 5 years, you understand? Term and the condition over there is we can 1 million of stock give you but the not now is not now. Is it every year how much in terms of your sales amount? You understand? Sales amount and the return profit, how much? We can give you the how much like this. And also you are working very hard here through the night, you understand? And also you can sales amount like this one, 5 years. Okay, we can give you the stock. And this stock is you cannot sell out now, you understand? But you can step by step sell out maybe 5 in maybe within 10 years, within 5 years, like this one of the binding of you cannot run away another company. This case is the stock option, employee stock option, and the employee or fringe benefit and health insurance. You know the health insurance everybody know, and the paycheck, salary, wage, financial literature, and insurance, predatory lending, retirement plan, Australia, USA, Canada, retirement plan is different one. As United Kingdom, United States is 401A, 401K, 403B, 457 plan is a core plan. Individual retirement account, Roth IRA, traditional IRA, SEP IRA, simple IRA, pension. This is a big science too. Simple living, social security, tax advantage, wealth, comparison of accounting software, personal financial management, investment club, collective investment scam. This is the personal financing. Next time, continue to lecturing to the next time is the public financing and company financing, corporate financing. Continue to do. Thank you. See you again in 30 minutes. Thank you very much.